So we're going to welcome Magnus Billing, CEO of Alecta, to the stage. Hi, Magnus. Welcome. Thank you for joining us today. Again, I've got a very impressive biography in front of me, but I'm going to let you explain what you do, but just quickly to mention that Alecta is a very large pension provider with $90 billion AUM. Over to you, Magnus.
Well, thank you very much, and thank you for having me here today. And good morning, everyone. And thank you, Eric, for a very interesting introduction. It's always interesting to see you, listen to your thoughtful ideas. I thought I would talk a little bit about the asset owner perspective and the integration of ESG and how we think about that in the COVID environment. And then touch also upon maybe the long-term view. And I know you have some questions for me. I don't know how you want to start this off. Sorry.
Well, I thought if you could say a bit about, for those who don't know about Alecta, maybe you could say a tiny bit about Alecta and what you do. And I do indeed have a few questions, and then we can take it from there.
Right, sure. So we're a pension fund. We are a focus on occupational pension. We have 2.5 million private customers, 35,000 enterprises as customers, Swedish focused. We manage, as you said, a little bit north of $90 billion US. We have one defined benefit scheme and one defined contribution scheme in the program, but we manage the assets as one portfolio. And we have the benefit then to be extremely long-term, given the fact that our liabilities run out 25, 35 years down the road. And we also have a strong focus on the ESG aspect. Has been working on that for a number of years.
So given your beneficiary profile and your role as an asset owner, how do you see the value add of ESG and integrating that into your investment process, and how do you go about doing that?
I think it developed quite substantially over the last few years, but clearly there are some strong drivers behind it right now, and I think the impetus has gone even stronger given the COVID-19 crisis. But the drivers are clearly the customers that I mentioned, the 2.5 and 35,000 enterprises. They're clearly telling us that we need to invest our money in a sustainable manner. So that's coming out as a clear message. The second driver, which has been very evident the last few years, is that the companies that we invest into, which are quite few, 100 companies only, they are getting quite advanced in integrating ESG factors into their business model, i.e. using it as a way to create value for its shareholders. And hence, in order for us to be a good investor from the point of view of identifying tomorrow's winners, we need to properly understand the ESG aspects of any business model. So we need to step up our game and capacity in the ESG space in order to be able to deliver on our fiduciary duty to generate long-term return for our customers. So that's the second driver. The third driver is the regulatory space, which in particular in Europe has been very, very strong the last few years and are now trickling through into the market and is changing the way that we operate it on a day-to-day basis. I think also what has become the fourth driver, which I think is coming now, is when we see the effects of COVID-19. It's maybe too early to say that what we see in the crisis will be a long-term effect, but I think it's clear from the data right now that the companies that are highly rated on ESG or scoring high on ESG factors are performing better than its competitors that are not ranked as high on ESG scores. So clearly, there's a strong argument right now to say that the ESG company, the good performers in the ESG space, are the winners of tomorrow. And I think there are, in my view, strong arguments to say that that will continue for the long term, but that obviously remains to be seen. But that's the belief we have at Alecta.
And how, just sort of drilling down into those drivers a bit more, one driver you mentioned was client demand and how that's changing. How do you engage with your clients, with your beneficiaries? How have their views changed? Are you picking up any changes? Where do you think where do you think their preferences will head? Obviously, a lot of the focus has been on climate change, different aspects of climate change. Are there other issues that you're picking up?
Yeah, I think the climate has been an area which has been very concrete and tangible and on top of the mind for many of our customers for many years. But I think what's changing right now is that the social aspect, the S of the ESG, is becoming more in the forefront. We are interpreting our customer in such a way that this is a more important component of how we manage the assets, their money in the future. And I think it comes down to some extent to what we see now in the COVID-19 crisis, that the society, in generally speaking, the resiliency of the societies is maybe not as good as we anticipated going into the crisis. And we are seeing parts of the society being extremely negatively affected by the COVID-19 and probably would have scars for a foreseeable future. And I think that will translate into even more demands or requests from the customer side to take a social aspect in the investment process that we adopt. Then also a second trend, which is on the G side, is that on the governance side, we are starting to interpret our customers in such a way that they expect us to take more of a stakeholder view rather than a shareholder for profit view. I think that's a very difficult area, but it's something obviously that we need to address given the fact that the customers are coming forward with this message quite clear.
Thank you. Very interesting to hear. And another driver I wanted to pick up on was a regulatory driver, because obviously you were part of that very distinguished group of people on the high-level expert group on sustainable finance for the EC, and those plans are coming to fruition. What's your view on that? The developments, the implementation, is it where you want it to be? What more could be done?
Well, I think... I'm impressed by the European institutions, the speed they have in the implementation of the sustainability agenda. So that's I'm encouraged by it, and I'm impressed. I must say that I have high expectations on the taxonomy. I was initially, I must confess, a little bit skeptical towards it because I thought it was extremely difficult and technical and challenging. But the work that the technical group has done on the taxonomy is nothing less but very impressive. And I think it will have a fundamental impact across the board, across the investment chain on how we operate. It will clearly impact us as an asset owner. It will impact the issuer. And it will, end of the day, have a meaningful allocation change towards green investments. So I have high expectation of that. I also think one thing that has been important for us in this context has been the supervisory's push towards integrating ESG stress testing into the ordinary stress testing of asset owners, for example. So we have, for the last 2 years, introduced a number of scenarios related to Paris Agreement and being aligned with the 1.5 degree scenario. And that is a very powerful tool to integrate ESG factors into your investment process, I would argue. There are clearly challenges in that, but I think it's on the right track to make ESG factors, both E, S, and G, clearly part of valuing assets and the potential and the risk associated with those assets.
So I know you've been doing a lot of work thinking about Paris alignment and what that means. Have you joined the Net Zero Asset Owners Alliance? What are the things you've learned from that process of examining that challenge?
Well, yes, we're very proud to be one of the founders of the alliance, and we think it has shown great potential. It's extremely valuable platform to work from for us as an asset owner. I think this integration of ESG factors requires cooperation across the board among the institutions. There are certain things that we are not able to achieve without the corporations of other similar market participants. And I think the stress testing of your portfolio in line with Paris agreements is one such thing where you need cooperation from other institutions. To give you a concrete example of that, I think in order to do the stress testing properly, you need to have good quality data, which means getting a better quality on the scope 3 data from the issuer. And I think it's easy for us as an individual institution to say that this is something we want, but then to make it happen, I think you need a strong support from other institutions. So that's one thing. I also think it's important to create a platform like the Net Zero Alliance to interact with issues, to find a balance between what we want when it comes to data and what's feasible to get, and work with that. That goes for the quality data, but also to the reporting level on the issue side. So it's extremely important to have this kind of cooperations, and we are fortunate. It's plenty of room to maneuver without, addressing competitive, sensitive issues among institutions.
So, I guess there are going to be lots of asset owners who are being asked to join the alliance. And what would you say to those that are not convinced? To sort of it's too difficult. We don't know how to do this. Why would we sign up to something where we don't know how to achieve a target? Those are the sorts of arguments that I think boards and senior management will be thinking about. What would you say to those institutions?
Well, I think we're all feeling those challenges, that it's a little bit uncharted waters to some extent. But I think I would turn that into an argument for joining, actually. I think you could, by joining the platform, by joining this alliance, you could get the opportunity to meet similar institutions in similar situations, meeting the same similar challenges that you're addressing. And together we could work on those and jointly become better and share best practices and share knowledge and put us in a better position to go and do the job we're set to do, i.e. ensure that we deliver on the fiduciary duty, which is long-term return for our customers. And again, I think that is no conflict of integrating EC factors. On the contrary, I think, particularly in these days when we, for the next years, will expect a lower return, you need to be able to see the opportunities and manage the risk. And many of the opportunities and risks are related to ESG factors. So I think join the alliance and share your concerns and share your challenges, and we can work together on those. That's the approach we've taken when joining.
Yeah, well, I'm sure many will follow, and I'm sure you'll get lots of requests for more information as well. So we're getting questions from the audience now. A reminder to, of course, ask questions. One question from a pension board member. Do you think greenwashing and purpose washing is a problem, and what are you doing to deal with that?
Yeah, I think that's something we need to be aware of and be a little bit cautious about. I think the taxonomy that's being put in place can support us in avoiding greenwashing. I think we need to be a little bit cautious about initiatives like green supporting factors on the capital requirement side. I think such initiatives would encourage greenwashing or provide impetus for it. But currently, the market space, I don't see I'm not that concerned about it as the market stands right now. But obviously, it would be detrimental to the progress of ESG investment if we, as market participants, are providing greenwashing to an extent that our customer feels that you cannot trust that their money is allocated to true green initiatives or ESG initiatives. So something to keep the eye on, but I think the regulatory space is supporting us to avoid that right now with the taxonomy.
Yeah. Well, thank you so much, Magnus. We're out of time for this segment, but continue the fantastic work you're doing at Alecta. We've just heard from a leading asset owner, one of the founders of the Net Zero Asset Owners Alliance. Thank you.
Thank you.